Hey guys, Mike here. So, oh boy, what a day for risk on assets. That is for sure. As you saw, the S&P and the Qs went, whatever. We're just kind of sitting out here, taking a break today, and then small caps and heavily shorted stocks were, going crazy. So it's one of those types of days, and we'll get into a few things to make sure you're aware of. One of which I can guarantee you is not going to happen like you think it's going to happen. I'm also going to talk about a stock that a lot of you guys keep asking in the comments about. So I was like, fine, and let me just cover this thing and let you in on a few things. Some of you guys probably don't know this, so I'll show it to you. And in this video, I'm going to show you actually a couple of things you might actually be able to use going forward. So hang around for that. But one thing you're seeing a drastic change that continues to happen is these rate cuts, buddy. I remember this was 74% in March. It was going to happen. Now it's down to 40%, almost 60 saying, nah, it's not going to happen. But look what else is happening. In May, when the Fed meets, almost 83% chance they're saying there's going to be a rate cut then, if you look at it. So that's increased dramatically. So it's shifted and been pushed back. We got to see how the market's going to take this. Because when B of A did their survey with a bunch of the hedge funds and everybody else, what was the number one driver of the market they put in here? It was the Fed, 52%, corporate earnings, 33%. So the Fed better start cutting soon because, again, a lot of this stuff's already been priced in. And when we look at this chart here, this includes CDs this time with all this money sitting on the sidelines, right? So it's almost $9 trillion, okay? And a lot of people, of course, they look at this and they go, oh, man, when they start cutting those rates, that's when all this money is going to come flying back in and everything, and then the market's just going to go to 10,000 and all this crazy stuff. And you can see the peaks and you see the drawdowns and everything else, but you can't really zoom in too much on this, right? So when you look at this, it's kind of hard to tell when the money actually flows in. But again, I don't know about other charting platforms or anything, but if you go and you just get bored and want to go into trading, if you have one, just pull up the Fed funds rate, pull up the money market accounts. You can look in there. You can tell exactly when money starts to flow out and flows back in. There you can see the rate cuts, and you can see it for yourself. It's not when you think it's going to be. If you're a member, of course, make sure you go scroll back. If you're new, January 9th, I put this out there. The truth about when and how much money will move from money markets into the market, because it's not going to be what people think it's going to be, okay? Now, and guys, before we continue, if you can please hit that like button, that little thumbs up down there, helps people find the video, helps out the channel. And if you like down-to-earth content, talking about the financial markets, don't try to talk over your head, then think about subscribing. I keep getting questions about this stock. So I'm going to go ahead and look at the chart for you guys because it has been crazy, but certain things you need to make sure if you're just basically blindly buying into this thing, you need to understand why it's moving like it is, right? There's a couple reasons for this, but it is SMCI. Again, this is an AI hype type deal here, but what's happening is you can see this thing is off the charts, right? It's just going parabolic. Oh my goodness, I mean, this morning, look at that move. Just in this morning when it pumped up to 483 and then dove all the way back down to like 414 within a matter of, an hour? So that's a huge move for this stock right here. Again, 17% in a very short amount of time, but that's how this stock moves, okay? This is a trader's dream. This is what traders are getting in, which I'll show you in a minute what they're doing. But, when you look at it, what is this hype all about? It's about some earnings expectations, all right? They report earnings next week, I believe, and so they say they're going to have a lot of growth and everything. So, boom, here we go. But understand why this stock is moving like it is. Look at the market cap, $24 billion. That sounds like a whole lot, right? A huge market cap. Well, you pull up AMD, and all of a sudden you go, whoa, AMD, another semiconductor stock just like this one, $272 billion, right? More importantly, you go to SMCI, and this is the big one. Look over at shares outstanding and shares in the float. Look at that, 52 million shares outstanding. That is nothing, okay? To pull up another semiconductor, which has a market cap, the one I can find when we're close to it, is OWN Semiconductor, has a $32 billion market cap, so it's only $8 billion more market cap, right? Look at the shares outstanding in this thing, 431 million. So over 8 times what this other one has, and that matters. Why? And if you remember back in the day when penny stocks were a thing, we were going through penny stock mania and SPAC mania and everything else, there's a reason why. So here you can learn real quick why stocks float matters, right? A stock float has material and noticeable impact on share price action. The float represents the true supply of shares available for trading. If demand is high but supply is low, guess what happens? It rockets, right? More importantly, here's a couple of things that happen, which is happening right now with this one. A low float, also referred as a thin float, tends to have less liquidity, which results in a wider bid and ask spreads for those of you playing options on that one. And more importantly, it is susceptible to short squeezes because of this, because short sellers often get trapped when there are no more borrowable shares, right? Look at this chart right here. Does that look familiar? Looks like the one I just showed you, okay? That is SMCI. That's exactly what's happening. Shorts get trapped and there's no more shares to borrow, so they have to start covering, right? And then they're running it back down because they're shorting at the top. And what traders are doing, they're just using the fib levels. A lot of them are. I see them posting on Twitter all day long. If you just look at the day, for example, once they hit the top, they found the bottom, and then they just start trading inside this thing, and it's hitting these fib levels and respecting them greatly, as you can see right here. Already rejected today on the way back up at the 50 Fibonacci, but you can see it's bouncing all over the golden pocket, 0.79, 0.70, 0.50, and they've been doing this each and every day. That's why it continues to go up, and it'll pop, and then it'll drop down, and then same old thing, rinse and repeat. And when you pull out on 15-minute, you can see it almost a little bit more clean here, but once you got that bottom in there, again, you can see where it's bouncing. But when you pull out and look at it, again, earnings are supposed to be, I think it's Monday if I'm not mistaken. So the big thing is, is this going to be a sell the news event? That's really the big thing. We're running up into earnings, same way Bitcoin ran up into its ETF, same way we saw many stocks run up into earnings, and then they crash and burn. Will this be different? I hope so for people that are in it. I hope it goes to 1,000 people that are in it and they make a boatload of money is what I hope happens for everybody. But again, hope don't float, so we'll have to see. And to me, when you got a stock like this, you see how it breaks out, right? I mean, you see those lines? I mean, I posted this many, many months ago in our Discord and everything, saying, hey, watch out for this breakout. It's a breakout type stock, right? It explodes with huge moves, if you can see all those lines. And so you got some, that trend line, you got some, I guess, if you want to call it support, you can call it support coming down there. It looks like around 375, whatever that is. But again, the way this one's moving, I wish you the best. Let me know in the comments what you're doing, if you're playing options or just commons on this one. But you can see the increased volume at the bottom is just enormous. So there are big money, not just retail playing this. You got some big whales coming in, pushing this one up, pushing it down, having a lot of fun, and making a lot of money. So again, I wish everybody luck. Hope everybody makes millions in this thing. All right. Now, what did we talk about yesterday? Watch the risk on assets, right? Confirm, Upstart. The ones that are heavily shorted, if these start to pump, more likely what you're going to see is stocks, especially like IWM, because why? Small caps are more risky than what? The Mag 7, which is kind of, struggling today. Apple looked good. Rest of them were just kind of flat, right? Just kind of taking a break. And one thing I'm going to add on IWM here, I didn't even look at, and I pulled up today. I told you guys about the 50 and all these anchor VWAPs meeting right there, right? I didn't realize that was a 200-week moving average level as well. And so, man, the amount of confluence in that area is crazy. It's probably the most I've ever seen on a stock. So that bounce makes total sense, but also makes more support if it does come back down and tries to break through all that. And you can see the RSI is getting back over 50. It looks like the MACD wants to do a bullish cross. So if that happens, you could see IWM continue, but watch those. I'm not going to call them crap stocks, just high risk, high beta, heavily shorted stocks, okay? And they continue to go. You're going to see IWM go as well. Now, obviously, Tesla started the moon today, and people are like, we're going to the moon, all right. And then what happened? That 200 weekly moving average smacked it down like it stole something once again. I believe it's the third time it's happened within the last at least 2 weeks for sure. And then from there, it just started to sell on down, started getting buyers in right around the 206.50 level. Again, that's going to be a key support level as well. Around 207, it seems like people keep stepping in over the last 2 weeks here. And you can see as we pull out, you see that 200-week moving average right now is a brick wall. And so right now, 206.50, somewhere in that area. Needs to hold. Again, we got earnings Wednesday, and so we'll see if it gets a pop, because you see how quickly this thing can move up, right? I'll guarantee people thought, oh yeah, this thing's going to the moon this morning. And then so pull up on your chart that 200 weekly moving average. And again, the weekly range is anywhere from 197 to look like 227, somewhere in there. Big range, because you do have earnings. That's why you have such a big range. That's why the options are so freaking expensive and everything. And again, if that 207-ish area, 206-ish area breaks, and look for 195 as support as well. AMD, you might have saw a pop and a big red candle happen. The only thing that happened for AMD here was it just had a downgrade from the place I never even heard of. Northland downgrades AMD to market perform. That's the only thing that happened. But one good thing that really happened for it was, if you look to the left, that was the previous all-time high. So what did it do? It came down. It did a support resistance flip here where it hit that level, boom, and bounced. Okay, so far it's turning that into support. That is actually bullish. If that can hold, that's actually a good thing. Okay, PayPal saw a big pop up going in that gap, which kind of surprised me. I was like, whoa, that thing popped up fast, then sold off just as quick. And understand, you could see this is what happened on PayPal here. It has this innovation thing coming up, and it's on Thursday, January 25th, this week right here. And obviously this has some big green candles. So we're going to see if they continue to push this up, and this becomes a sell the news event. We've seen so many times on like Tesla, Cyber Days, and all these other different stocks and stuff. But again, when you look up and you say, well, why do we stop there? Always look to the left, right? And we're on regular trading hours. There's a fair value gap. That's where it stopped. That's where it got rejected. If you don't see it on regular trading hours, go down to the bottom. See right there, RTH? Click on it. Go to extended trading hours. Scroll to the left. What do you see? A gigantic fair value gap, right? And so it's an imbalance, buying and selling, because you had a big move down that morning in pre-market. Okay, and so if you don't see one, look, usually you're always going to find one when you get a rejection like that, especially a quick response off of it, right? That's what you want to see. Also, pull your fibs up from the top to the bottom of the move and look over there. If you scroll this over here, what happened? It's right there in some major fib in that golden pocket 0.70 area. Okay, and so you'll see a lot of that stuff kind of line up if you're ever wondering why something just all of a sudden flip like that. Now, if it does continue to sell down, you do have the 200 moving average. You know, we'll see if it can turn that into support if it continues to come down along with that trend line. But we'll have to see, because that was kind of some suspicious movement right there. Boy, they sold that thing down fast as soon as it got up in that gap and stuff. Now, looking at Disney here, we talked about it. This one right here still moved up, was green on the day. It's getting close to that gap right there. It'd be interesting to see, because Netflix reports, and if they do well in their streaming, will it pull Disney up is the question. As you can see on the 4-hour time frame, it is setting higher lows, higher highs, broke that level. And so, again, you got call it a choke, a change of character to the bullish side, but there still are levels to break right here. So just look for the levels of like 94.85 and then 96.37, which will put in that gap to break. But what I was saying, it'll be interesting to see if when Netflix reports, does it pull up Disney? But when I looked, because I was trying to think of maybe a sympathy play, if you're looking to play a Netflix earnings deal, because Netflix's options are through the roof right now, then, I was saying, well, maybe Disney, maybe Roku. Well, when I looked, actually, when Netflix popped on its last earnings, Disney, Roku, and I looked at one other, I can't remember who it was, they dropped, right? Because they are competitors. Sometimes you get those sympathy plays, but in this case, Netflix ate everybody's lunch, right? And so I don't know. I don't really see. Let me know in the comments if you can see a sympathy play on that. But when I looked at the chart, it's exactly what I saw. So I thought that's out the window. So I don't know if Netflix does really well, which you think they would, because they had that ad stream revenue coming in. So the revenue should be more. That, if they pop, would push Disney down or actually carry it up. So we'll see if there's a difference this time. Now you might notice Chinese stocks, once again, hot garbage. Going down again, all of them red. Of course, what happened? China left a certain key rate the same, but also the fact that, man, I mean, that real estate market, boy, whoo, that's got people really worried. I understand why. Look at this. So their indexes go down dramatically, right, because they trade before we do. But look at this. The number of foreclosed homes in China rose 43% year on year in 2023, according to the private survey on Monday, highlighting a worrying trend of rising mortgage delinquencies amid a sustained property market slump, which is an understatement. The number of foreclosed homes up for auction stood at 389,000 units last year, said China Index Academy. A total of 99,000 units worth a combined 150 billion won, or 20.84 billion, were successfully sold at auctions. And then you can see total foreclosures, including commercial, residential, and industrial properties, land, garages, and parking spaces, total 796,000 units, a record high. The number was up 36.7% in 2022. And so again, it's no different than when we went through our real estate stuff, right? When people are like, oh my God, this whole neighborhood is being closed down on. And imagine, our real estate market accounts for like 35% of our wealth. Theirs accounts for 70%. Woo! And by the way, who's ever in charge of that firm, if that's located in China, I might be packing up and leaving the country by putting that survey out there. Ooh, they don't like that. They don't like that a bit. Somebody might be getting re-educated. Wink, wink. Now, earnings. You can see we're going to have a boatload tomorrow. Verizon, 3M, RTX, Johnson & Johnson, Halliburton, P&G, DR Horton's coming out. All right, so just a boatload in the morning. And then there's Netflix. Texas Instruments will be another one. You got a bunch down below right there. As far as economic data, it's only going to be the Richmond Manufacturing Index that will come out at 10 a.m. But I don't really see the manufacturing data really having that big an effect on the market unless it's super positive, maybe, because the manufacturing data has been horrible, right? And I feel like we're in this tug of war, which two camps are trying to win, right? There's the soft narrative, which is you want economic data to look good, not too good, of course. That way it's a soft landing and they'll just cut because we're good to go. Inflation came down like it's supposed to. And then the other side's like, no. If you have hot data coming in, like the jobs data and this other stuff's been coming out, like the retail sales and stuff, there's no way they're going to cut, all right, coming up in March and May or stuff. And so, whichever way they want to go with it, because remember, that's what all of this is predicated on, right? They're going to be cutting rates and we're going to go into an easing cycle and QE and all this good stuff. And they're going to slow down the balance sheet. Like that's what this is predicated on, okay? And so, again, we'll pay attention to it and look at it. But more importantly, now earnings is here. So now we get to see, like, I went and found the stick. I've been using it for like a year and a half now. But, again, like I said, the bar is literally on the ground. So it's not going to be hard for these stocks to beat. I mean, it really has, because the downgrades have been relentless, right? Them just lowering the expectations for this. And again, I coined the phrase earnings apocalypse by over a year ago. People keep expecting this. Are we ever going to hit it? Because it hadn't happened. And the bigger thing I tell you, watch those big stocks that make up such a big amount, because they're going to get to keep a whole lot more of that money is coming from overseas, because the dollar has just been selling down for quite a while compared to the last, actually really 2 times that they reported earnings. So it's going to make things look a lot better, okay? So just kind of keep that also in mind. And the Mag 7, it's not like, when you look at it, a lot of them are setting all-time highs or almost at all-time highs. So it depends on how the market wants to view it. But most of them should really hit. And, of course, the biggest thing is going to be on the guidance, because we know all the layoffs that are happening. We get it. There's just, I think Google announced some more. Amazon announced some more. But what does that do to the stock normally? Makes it run up because they're cutting costs. Okay, and so when they hear that on the earnings call, we're cutting down to be more efficient. Like, people like to hear that. That's just the way it is. So that could be another more fuel to the fire. Okay, so just kind of keep that stuff in mind. If you plan on shorting this stuff or trying to play earnings, and everything with options, just keep that in mind as well. So anyway, let me know in the comments what you think, how you think Netflix is going to perform. Again, it's not part of the Mag 7 anymore. I guess it should go back in now, but I consider it part of the Mag 10, that along with AMD and one of the others. So anyway, hope you guys got something out of it. Hit the like and subscribe button if you did, and I'll see you tomorrow, and we'll wrap it up, and I'll try to put as much earning news out as I can in the morning news brief for you guys. Have a good one.